Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look again on euro currency. So you can see now we have no illusions concerning the upward possible continuation. Actually you can see our long-term plan in action. So we said the few months in our weekly reports that we do not see any good background for bullish performance of the euro currency, and if even we will get some pauses or retracements, they will be temporal. So here we have downside acceleration. So if yesterday market had at least theoretical chances to show the bounce, because we still have untouched major 618 support area now, these chances have been erased and a road to the downside is opening. So with the performance that we see on the intraday charts, it seems that we are getting the starting of the bearish leg, not only on the daily chart, but mostly we could say this is continuation of the monthly trend. So reaction on the monthly COP, it seems now is over, and we are ready for action to the OP, which stays around 104, 105. So in general, from the fundamental backgrounds, nothing new actually. So the United States holds the throat of the European Union in the iron grip. So actually, the new sanctions about the coal import from Russia, it's also, well, I don't want even to comment this because it's first of all very small trading volume of the coal with Russia. It's approximately 4 billion euros in the year. And when you have the problems with the gas and now you're denying the import of the coal, so it's also raises some question. But well, anyway, it just shows the impact of the United States policy. And actually, we talked about this within the recent few weeks, probably in our reports, that United States intends to protect their own economical interest until actually the last year in the European Union. So this big money outflow, capital outflow from the European Union currently to the United States, and simultaneously the overall economical situation is deteriorating in Europe. That leads to rising of the United States dollar. So the whole burden of the sanctions actually have been put on the shoulders of the European Union, because the United States had not big trading volume with Russia. They are not denying to import some assets, as you know, that they think crucial for their economy. So, well, it's a very flexible policy concerning to the European Union. So anyway, and technical and fundamentally, we see the downward continuation. So as you know, minimum target, as we said, nearest standing target, better to say, is the current lows. It's 108, which is the minimum target of the grabber that we have on the weekly chart. So if you do not have any short positions by far, you could try to catch some pullback on intraday charts. But as market already has broken all the levels, it seems that the pullback might happen only when the market hits the tail oversold. There might be some minor retracement. Speaking about longer term perspective, if we'll take a look at the cross-market analysis, there are two major things to consider. First of all, if you'll take a look at the dollar index, you could see the dollar index already has broken these corresponding lows to the euro currency, and the dollar index is the top, and it's already is moving higher. And probably it is not at overbought. Dollar index, yes, it has the chances to move higher with the overbought. If you'll take a look at the monthly picture, which you probably also remember, that we have the triangle consolidation, market starting an upward direction to the corresponding trend line, and the same corresponding trend line you could find on the monthly chart of the euro as well, if you check our recent weekly report. This is a bit different shape, but logic is the same, and market currently stands on the way to the next target. This is what about the dollar. On the interest rates, you could see what performance we have. despite the overbought, guys, here strong overbought on the 10-year yields, market is climbing higher. This is outstanding case for financial markets. You know, interest rates, the financial market, they feel very uncomfortable with any overbought situation, and can't stay for a long time or be overbought or oversold compared to the commodities. I've talked about this very often. So, but despite this, you can see market is moving higher, and currently you can see that interest rates actually already 2.6%. So I would not want even to calculate here the XOP target. You could try to do this by yourself, but in general, as you can see, the spiral of the inflation in the United States is twisting up, and interest rates keep going higher. So from that standpoint, if we'll take a look at the lower time frames, it's not many things to talk about it. On the follow time frame chart, we haven't got any pullback, even from the 618 support. Now it is broken. In general, this thrust action that we discussed recently is still valid. Upward ABCD has been erased as market dropped below the C point, and you can see here market actually has formed bearish reversal swing. All bearish signs right now stand here. So just keep watching. With the pullback here reaching of some fib level, you could try to take the position. You should also remember that euro currency shows when it stands in a direct action with a trend on the high time frames, it shows very small pullbacks, even when it hits the overbought. You could easily check this when you consider some strong action on the daily chart and what is happening when the market hits the overbought or oversold area. Pullbacks very small. That's why on hourly chart it makes sense to consider nearer standing targets, nearer standing levels. Maybe it will be 30% from this week action. So you could see actually this is last week, this is current week action. This 109.40, this will be great if we will get also maybe retesting of these lows. From the logical point of view, this seems not bad area where it stops somewhere above the conference. Maybe this will be not bad solution for the current situation. So that's actually what we have currently on euro currency. Let's keep watching what will happen.